Good evening, everyone. Tyler's off tonight. Well, here's a ticker symbol you'll be hearing a lot about pretty soon, BABA. It stands for Alibaba, often called the Amazon of China, with a little bit of Google mixed in. You can't buy or sell it yet, but this giant Chinese tech company is expected to launch a huge public stock offering in a few weeks, and the shares will trade on the New York Stock Exchange. Now, investors all around the world are waiting eagerly for this IPO, and today they got some fresh financial information about this tech success story. In a filing with the Securities and Exchange Commission, Alibaba revealed that its profits nearly tripled and its revenues surged last quarter. Also, the company said it's investing in more businesses with new revenue streams. Kayla Tausche has more on what's driving Alibaba's rapid growth and what investors are looking for ahead of that IPO.
Alibaba's earnings engine is revving ahead of its massive IPO later this year. The company's latest filing showing revenues growing 46% to $2.5 billion in the quarter ending June 30th. Revenues from mobile shopping doubling since March. Investors took the numbers with cautious optimism, noting that while profits nearly tripled year over year, the private value of Alibaba stock has tripled too, even as sales growth matures and slows. Legendary tech investor Roger McNamee says even if it's slowing, it's still faster than its peers.
I think the thing to focus on, especially with Alibaba, is that we're in a very low growth economy right now. So companies with real underlying growth are few and far between. Investors are stretching really far and really hard to get them and are willing to pay up quite a lot.
That quest to buy Alibaba's growth may have other effects on your portfolio. Piper Jaffray and Bernstein believe Alibaba's valuation will be north of $200 billion. Reuters reports money managers will make room for that 800-pound e-commerce gorilla by selling shares of its competitor, Amazon. Meanwhile, Yahoo, a major Alibaba shareholder, could see a boost. Alibaba is eyeing a debut here at the New York Stock Exchange in mid-September, following 2 weeks crisscrossing the globe to meet investors. It will be a milestone for the market, the largest IPO ever in the U.S., both in the technology sector and beyond. For Nightly Business Report, I'm Kayla Tausche in New York.
Our guest tonight says Alibaba will be the stock to own in every investor portfolio. She's Kathleen Smith, IPO fund manager at Renaissance Capital. Kathy, nice to have you here on the set. And, you're really not given to exaggeration in all the years I've interviewed you, but this is such a bold statement. Why do you say that Alibaba is going to be such a hit?
Well, it's such a fast-growing and profitable company, and it's a way to own the digital economy in China. And I think that every portfolio manager is going to take a look at this, and eventually this will find its way in all major stock portfolios.
How hard is it going to be to get some of this stock if it's that hot?
I don't think it'll be too hard. It's a very large IPO. We think 20 billion, which could make it the largest IPO ever.
That would be bigger than Facebook.
Yes, it would, and bigger than Visa, and maybe bigger than the biggest of all IPOs we've seen yet. So the company will have to work hard to attract investors. And I think that there will be a chance for many investors to own this stock either on the offering or in post-IPO trading.
You kind of feel like some investors will be skeptics, especially after what happened with Facebook. It had so much press, so much publicity, and then in that first year of trading, it didn't do so well. It really floundered. I mean, how do you think Alibaba will do in that first year?
Well, we think it will do well in the long run, but with the IPOs in general, they can be volatile and subject to a lot of emotion. So investors looking at newly public companies need to realize that their stock charts aren't set. There is going to be some uncertainty about how it rolls out. But we do think in the long run, this is going to work very well.
As Kayla said in her package, the next few weeks, Alibaba executives are going to be on the road with their bankers on a roadshow pitching this to institutional investors. How do you think they're going to respond to these new numbers that we saw today about profits and revenues?
I think the numbers look very good. We were a little worried when we saw the March numbers, which had a lower growth rate in the high 30%, but these current ones in June show an accelerating growth rate and success that the company's made in the mobile market, which has been a key area of interest and concern by investors. So they have done well. Hat tip to management. We think that these current numbers look quite good.
That's really impressive. Now, the whole IPO market this year has been impressive. I think the best market since, the year 2000, with almost 200 companies going public, and now this Alibaba thing. Do you think this continues? Will there be an Alibaba effect, that it'll attract more companies to go public, or just the opposite, it might crowd out the other guys?
There's a little bit of both. The IPO market's been very active so far, and I don't think that relates to Alibaba. It actually relates to very strong returns. For example, the Renaissance IPO index was up 54% in 2013, and so far this year is up almost 7%. So those are great returns, and they encourage more companies to go public. So it's been a very good market. We do think, however, that Alibaba will take some air out of the IPO room a little bit while it gets done. It's such a large IPO. It'll represent the $20 billion deal, could be half of what we've raised so far this year in IPOs.
That's amazing.
And so I think that, and investors will make room for Alibaba in the portfolio, maybe looking at JD.com as a comparable company that might be less interesting to investors when they can own this juggernaut, Alibaba, as an alternative.
Well, we'll see what happens a few more weeks. Maybe you'll come back and give us analysis post-IPO. Thank you so much, Kathy. Real pleasure having you on the program. Kathleen Smith, IPO fund manager at Renaissance Capital.